Hello guys, welcome to Traders Therapy Session. I'm your host like always, KRO. Let's go through a systematic trading of Nasdaq, guys. Please let us pay attention. I want to highlight something for you. This is a systematic way that you can easily make a substantial income using the strategy following the rules. So let us go through the rules before wasting time. We are going to use only 3 time frames here. Please, let's follow. I will clarify everything that is said here as we go to the charts. We are going to use 4-hour time frame fair value gap as the draw on liquidity that will determine our order flow. Price will move away or towards the fair value gap. So the fair value gap that you are going, the recent fair value gap, or the obvious, let's put it that way, the obvious fair value gaps that you are going to see on that time frame, that will be the one that will establish the move, most likely to establish the moves that you see. We on price, and we are going to use price to determine the closest hanging fruits, preferably the previous 4-hour candle high or low. That will be our closest hanging fruit. If we are going to buy, it means that the high of the recent candle will be our closest hanging fruit, and if we are going to sell, it means that the low of that recent the previous, not the recent, I mean to say the previous candle, that will be your target as a closest hanging fruit. Then the time is very important, guys. You need to wait for 5 a.m. candle to close, and not a.m. to your time. We are going to use New York time on this one, and you wait for that candle to close first so that you can establish where is your direction. Then if you don't know how to set your time zone, you come into this corner right here. Then you look for New York time, of which is UTC -4. You toggle your time into that so that you don't get misled when it comes to time. So we are going to move into 15 minutes time frame. Let's move into it. We are going to look for the following here, guys. Liquidity must be taken before market move to your direction. That is very important, and then you will see how satisfying, I don't know if that's a better way to say it, how satisfactory it is to see this forming. And then we need to see the turning points of the market, of which are important, and then we are going to look for the following to get our turning points: fair value gaps on a 15-minute time frame, the current price during that time. The wicks are very important. You know, we treat our wicks as a fair value gap as well as an imbalance. Then the price action, whatever the price action that presents itself, it is also important during that time. Then the 15-minute time frame order block, guys, that one market mostly on that order block. Then we will move into 5-minute time frame for entries. So your entry models will be title soup, breaker, mitigation. Most important patterns are these 3 patterns that you're going to find, guys. And then your maximum stop loss, let it be around maximum 30 something pips. That's when you even stretch it further. But if you see it going even more, something is wrong, you've done something, you should be worried about that. And you need to notice the following, guys. Day trading is not everyday trading. So it doesn't mean that each and every day you'll go to the market and find your entries. Yes, you can force to find your entries, but it is important to be on the brighter side. So you must look for the simplest models that you can see. If it's not simple, move away. So let's go into chart and explain what we're trying to do here. Coming into the charts, let me start with this one. You will notice that let me just highlight few others. I have this. What is this? Is this 5 a.m. candle? Okay, is this one coming into this fair value gap, going into that, because of there are other convictions that will tell the price to go into that. But without wasting any time, let's just get into this model. I will go and look for the 5 a.m. candle. As you can see, 5 a.m. candle closes, and then it closes with a fair value gap. You can see between 1, 2, 3 candles, there's a gap between. This is what we call a fair value gap. This is the closest fair value gap that we have right here. Otherwise, we have this inversion fair value gap, of which we can even go to, because we use fair value gap and inversion fair value gaps. You can even utilize this, but the one that comes into your eye, that should be the one. So either this fair value gap or this inversion fair value gap, you were still going to be correct. The most important is to know the price mitigated this fair value gap or this inversion fair value gap. What is going to happen? It means that the second candle, it will do what? The second candle will move away from that fair value gap. And then what is your closest hanging fruit? Like explained, this should be your closest hanging fruit right here as a TP. So let's go into 15 minutes time frame and see what we have right here without wasting any time, guys. Okay. Most importantly, guys, and please, if you are doing this by yourself, do not even try to use, as I'm using the free version here, don't even try to use replay mode to replay it. It is okay to see the price after it has performed. This is called back testing, not practicing or doing whatever it is called. This is called the back testing, and then you are investigating what the price is doing. So this is where we are. Remember, guys, the candle that closed, it closed somewhere around here. Then you wait for that candle to close. The second candle, we said go to 15 minutes time frame. Some sort of liquidity must be taken out. So just with this, I will highlight with this example, only with this example. Then after, I will just have to point them out. You see, this liquidity was taken out. Even this one was also taken out. You see, this lows as a support, it was taken out. This one was also taken out. To do what? And we said we look into the price, and especially the other block during that time is very important, guys. We have this as an order block. Okay, let's highlight the whole candle, but I would love to go into the body, especially the body, because in most cases you will see the bodies being mitigated and the price move from that. It is not likely that you will see it mitigating just the weak and moving. It will just have to go for the body. But what I'm trying to say, guys, is that just wait for this to happen. Then as you see, this is 9:30. This is a confirmation for you to tell you that the market is really ready to go up. Then you go to 5 minutes. After this example, I'm not going to do more drawings, guys. I'll just have to highlight only the most important things. Then from there, we'll move. Then remember, what are we looking for on a 5 minute time frame? Just for the sake of this, 5 minute time frame entry models, title soup, breaker, or mitigation. So right here, you have your 930 performing. Then you have your low. However, you can pick it. You can pick it here. You can pick it here. You have your low. You have your lower low. So this becomes your breaker. And to some of you, if you can ask, what is a breaker model? Let me just show you. You'll have a market coming down here, coming up here, then breaking this low, moving high. This type of a pattern that you see right here, this is what we call a breaker. The market created a low, a lower low, then we have market structure shift right here as a displacement. Then the market will come and look for entries here. This is your breaker starting from here, or the fair value gap that you see. If you don't know what breaker is, please guys go and look at my videos on YouTube, and then you will see there's a video where I explain breaker, the breaker model. Then you will want to have your entry somewhere here, maybe around the discounted area, then in order for you to go up. Okay, so what is it, if you may ask, what is it that we have right here? What is it that we have right here? We have a breaker. Guys, this is the only video, I promise, this is the only video that I do the drawings. We have market coming down, creating this low. Maybe somebody might say this, it doesn't matter, creating this low, high, creating this low, or it can start from here, it doesn't matter, creating this low, and then you see the displacement market structure shift right here. Then the price will come back to find the entry right there. So this will be your breaker with a fair value gap. Nice entry for the breaker, nice entry model. Then we are going long right at the fair value gap. Remember your stop loss, not more than 40, but utilizing the breaker, you would know already that either, sorry for that, I wanted to see this week, either the low of this candle or the low of that candle being your stop loss, then closest hanging fruit, that would be your closest hanging fruit, 1:2.3. So with this, if you were risking, let's say, and the price action can dictate where to go, but to be greedy, you would even want it to go high, and then the market will turn against you and hit your stop loss. Look at this, hit your stop loss on a winning trade. So it is very important to take the TP where it's due. So that is 1:2 comma something. If you were risking maybe a $50 or $10, you would have made a $2.3. That means you could have made $10, you multiply by 2.3, then it could have been $23.5. So let's go into the second one. I promise guys, when it comes to the second one, I'll just have to point out, so you utilize this first example as a case study, because going forward you are just going to move, and we'll check each and every day. Let's just go to 4-hour time frame. Let's see if we can keep this under an hour. And you also need to do this by yourself so that you can get the grasp of it. So the TP was hit, plus the 4-hour time frame was telling you that we have another fair value gap here that will turn the market. Not every fair value gap that you see on the market is going to work, guys. We have this one, then we go to the next day, of which is the 30th. As you can see, we have this 5 a.m. candle that needs to close. Then let's look at the fair value gaps. Do we have a fair value gap here? No. What do we have? But we do have a fair value gap right there. If you can check, we do have a fair value gap right here. The market was drawn into that fair value gap. Then we have the next candle. So this fair value gap, what does it say to us? It says that the market should go down. Where should be our TP? Our TP should be here. Looking at price, we still have the lows here. We still have the wick right here. Remember, we treat that one as a fair value gap. We have a low, we have a wick, and plus the fair value gap right here. So you could have used that one maybe to carry your trade, but the most importantly, this was going to be your ideal TP. Let's go into 15 minutes time frame. with the convictions that the market is going to go down. $15 what is it that we must look for? Remember 15 minute? Some sort of a liquidity must be taken. I said I was not going. Look at the cursor. This liquidity right here in the form of a resistance was taken out. Even this one was taken out. Some of you guys already, you have established the pattern that, oh, even closer here, there's a liquidity that is closer here that we also need to take out as a final liquidity. It was also taken out. What else do we have that could have made this price to turn here? We have a fair value gap that was not mitigated. Plus this as an order block, and as you can see, the close. But you would leave this one. You had another fair value gap right here. I hope you see that one. And remember, this is not your entry time frame. This is not your entry time frame. You have this fair value gap right here. It was not mitigated as well. Okay, so this will be your standing point. Plus you have the wick right there. So you have liquidity, one fair value gap. You might maybe battling with this fair value gap that I drew here. You might be battling with the other fair value gap, maybe wanting it to go into other areas, but the time will tell you. So let's go into our entry time frame, of which is 5 minute time frame, and see what do we have. Okay. Remember, on 5 minute time frame, we are going to look at our model of entry. After the close, this is 9 a.m. We have the close. Then we have 9:30 right here. You could have, because you knew that the market was going to drop, you could have used this as an entry because you had everything that you needed here. As you can see here, you have a high, you have a low, you have a higher high. You could have treated this as a breaker as well, with a little bit of a fair value gap plus order block right here. Right, 920, 925 right here. Or it was still fine. You could have waited. You could have waited for what? You could have waited for this to drop and treat this now as your model. The price action traders, they will call this one a complicated head and shoulder, but it doesn't matter. Then you treat this one as a high and a low. You can treat this one as a mitigation. Mitigation is just an opposite of a breaker, guys. Then you see the market dropped and gives you this false break right here, and it closed inside. Then as it came back, you could have dropped it here. So going short, if you went short for this one, remember less than 40, candle 1, candle 2 as your stop loss. That was going to be 1,1 there. But if you were just following price, and another thing, it is important to get out before lunch. So let's look, when is lunch? Lunch is somewhere around here, 12 noon right there. So before lunch, you also even took the low right there. And then look at the pips, the pip value is very important. Around 90, 100 and something pips. That will, around 80 to 100 and something pips. That will be your minimum target, most likely on a daily. Or you could have, if there was somebody else, you could have just got in here, utilize this fair value gap right here, utilize this as a breaker. If you were that aggressive, 15 pips, very, very, very low. So even with your risk, if you see this with your risk, you can even risk half of what you're supposed to risk, so that if you lose this trade, you can also come back because you have the direction. It's not that you don't have a direction. Then this could have been 1:3, and you could have also went for that low as well. You got your 1:6. Look at your pips being 112 pips right there. Guys, without wasting any time, plus the flu that I have right here, let's go into the next day. Which day was this? The third day, the Thursday, the 30th. Let's check the Friday. I hope you follow, guys. Let's check the Friday. Look into the second candle. What is the second candle? 5 a.m. Wait for the candle to close. Do we have any fair value gap right? Yes, we do. You could have just went for this fair value gap, of which is still true. It can still work, because why did the price violated this fair value gap? Because you had this order block right here. But you could have been helped by other fair value gaps. As you can see, we have a fair value gap here. Did we mitigate that fair value gap right there? Yes. We have a fair value gap. As we go far from here, the closest one, it will be this one right there. You can see the touch right there, just right there, the touch, and then it went down. You have also this fair value gap that you could have utilized, then for market to go down. Plus, you have this order block, but we are not here for that. We are just here for those fair value gaps to determine our directional bias. What is going to be your closest hanging fruit? This being your closest hanging fruit, the previous candle. This being your closest hanging fruit. Plus, you have this fair value gap right here. Okay, you have this fair value gap 1, plus this low, this fair value gap, trying to go for this other block. This is what the market would like to do, guys. Trying to go for this other block right here. As you can see, it took out the liquidity and it closed lower here before it established this move high. The supply and demand traders, they will call this a demand zone. Now let's go into 15-minute time frame. And try to find out what we have there. Remember, here we're going to look for a form of liquidity. Okay, this is Friday. As you can see, we took out internal liquidity here. We took out this liquidity right there. We even came to what is interesting right here, guys. This is very interesting. As you can see, we have an order block right here. This is not an ideal in terms of a body. I'm trying to catch the body, but you can stop using this one. You can also use this one as an order block. This candle, this move up right here, utilize this as an order block, but this is an argument for another day. This might be the reason why price had to go into it. But we have the 15-minute fair value gap that was mitigated right there. That was mitigated right there. We have this candle right here. As you can see, the price went into that candle. So after this one, looking into the time, looking at the time, the close, then let's go into our lower time frame, entry time frame, and see how we could have entered this market. Okay. This is one of the kind, guys. So here is what we're going to call it, a turtle soup. And this is the one that I love to enter. You could have had your entry right here, but the nicest one is this one. The most clear, the one that is clear is this one right here. How so? We have this fair value gap that the market was supposed to turn using it, but the market violated that fair value gap with this candle right here, and then it even went back down. As the price is coming, you could have utilized this fair value gap and said this is a mitigation. You're still going to be correct, but here's the important part. We have this fair value gap invaded into this mitigation, then this displacement. Looking into the time after NYSE, look at this right here, coming back into this invasion fair value gap. This is the entry for your title soup. Then you could have had your entry right here, had your short according to this right here. And the title soup, guys, you don't have to say for the title soup, whatever the test when it comes to invasion fair value gap, that would be it. Then you have the high of this candle of a fair value gap plus this high right here. That was going to be your safest stop loss, where it was going to be your closest hanging fruit. This was going to be your closest hanging fruit as a 100 and something pips. Remember the 80. And looking into the time, if we had looked into that before lunch, where is your lunch? Your lunch is somewhere around here. But it's not always that you're going to get the lunchtime being unfolded, because most of the time during lunch, the market has pulled back. So you could have utilized that one as an advantage, then had your 1:10 right there. Let's go to the next one. This was Friday, right? Friday the 31st. Let's go to Monday. Let's go to Monday. I hope this one will make sense as well. You just need to train your eye and your mind. And then how do you do that? Do a lot of practice. Do a lot of practice when the market is closed. Let's go to Monday. This is Tuesday, Monday. It should be the next one. As you can see, we have this right here, this candle right here. Then we are going to look at what? We are going to look at the closest fair value gap that we can find. This was never mitigated, as you can see. During your search, you have this fair value gap that was started here. Remember, I said the fair value gap will be the draw, but I do not want to use this here. This is the reason why price first draw into it. But we will want to look at something that is close. Let's look at this high right here. The high is 6.5. Look at here. The high is 656.8. Let's try to look at the high, whether it's mitigated. 655.8. Just a miss right there. So we are going to look at the fair value gap that is lower than this one, of which is this one right here. It's a little bit trickier, guys, when you first start doing it. So we have this fair value gap that we mitigated. We couldn't say even this one we mitigated or what. So it makes sense if we go for this one right here. If you guys, you can conquer the way of spotting your fair value gaps even when they are not there visible. They are not visible for you there, guys. This is the, let me not miss this one. This is Monday. So for this one, I'm going to look at, let me go and search for fair value gap that can accommodate this, of which is this one right here. So this is the fair value gap I'm going to use. This is that fair value gap. This one is even not there. And this one is just a miss. But I would have used, because of my experience and everything, I would have used this one, but I like you to keep it this way. So you have this candle right here. Let me also highlight this one because it's very important. Then we go to 15 minutes to verify whether the liquidity has been taken out to that direction or not. And remember, if you cannot spot it, day trading is not everyday trading, guys. You just let it go. Sometimes you will get it right. Look into that. What is your liquidity? You can see here we have a resistance here. We have everything here. It even took out this one, and it's likely to take out the liquidity that is closer to it. So that also adds up. Then we're going to look at 15 minutes. As we look at 15-minute time frame, we have this 9 candle closes here. As it closes, it also took out this liquidity right here. Then what makes this price to 10 here? As you can see, we have this price action here. We can call this one, okay, market structure shift. This one, we can call this one a supply, but not that one. Remember, we have an order block right here. This candle, not this one, but this one, because it's the one that took out the liquidity. For this case, we have this order block right here. This order block being tested. Do we have any fair value gap right here? We have invasion fair value gap being respected right here. We have invasion fair value gap being respected right here. Then let's look at the entry model. You have your high, you have your higher high, you have a break of structure right here, you have your price coming back into that. But is this your entry time frame? No, let's go to entry time frame and look at the price even clearer. The 15-minute, guys, is helping you just to get into your zone. Then after that, then the rest is history, guys. Then your convictions are correct. You have this pushing high. As it pushes low, you have your high, you have your higher high, or you can call this one after this market shift. Then you have a fair value gap right here. You can utilize this one as your entry. You're going short. Utilize this one as your entry. Let's see the time first. The time allows you this candle or that candle being the safest zone, but with that one, there is something pips, as we said. Oh, we didn't highlight the closest hanging fruit. And this one was very high trade. Then, okay, let's utilize before lunch time. When is lunch? Like I mentioned, during lunch, unlike that one, during lunch, you'll see a pullback mostly. So before lunch, maybe during those lows or everything, you would want to go out. You'd have your 100 pips right there. Your one is to 2.8. Then you move. Let's go to another day, of which will be Tuesday. 4 hour. Sometimes it's gonna be easy, guys, but sometimes you're just going to have to hunt for them. But anyway, this is how the market moves. Going for Tuesday. Tuesday, 5 a.m. Okay, here we are on Tuesday. 5 a.m. candle closes. Right here. Do we have any fair value gap right there? Some might say we went into this fair value gap, so we want to go down. It's still fine. Let's look at the, if you went for this, because the closest hanging fruit will be this one or that 80 pips. But I'll just explain how it moved. It will be around 50. But if you catched it, I don't know whether it went first or if you catched it on the higher area around 90. So this one, let's talk about this one. First fair value gap that you would notice, it will be this one, saying you have a fair value gap right here. This is 5, right? You have a fair value gap right here. Then you would want the price, but it's not just that fair value. Yeah, yes, there is that fair value gap. You have fair value gap right here. You would want the price to go below this candle, and it did not. But if you look at on the other side, you also have this one right here, and you also have that one right there. Okay, let's just not waste time on this one and call this one a loss, because I'll start to defend and saying, looking at the price, whatever that the price is doing, market maker model. But this is the long formation of what? This is a long formation of what we used to get on 15-minute time frame. Remember the form of liquidity that we need to take out, this one and that one, then came into the order block, as you can see, that order block body, then moved. So it's still moving in order to get this one. Anyway, let's call this one a loss. That will be the second loss ever since we came into this. So let's go to another day, of which will be Wednesday. Here we are. We're looking for a fair value gap. What fair value gap do we have right here? Some would say, let's see, some would say this one. You would call it a loss as well. But we have this inversion fair value gap right here. And of which this is why the market did, because of what is happening right here, this being the market maker model, like I said before, this inversion fair value gap is very important for you to see. This went above this fair value gap. Then you would want the price to come back and test this fair value gap right here. And let's see, it just mitigated a little bit right here to test this one and go above. Maybe this could have been your second loss, but you would have noticed, if you did more research, you would have noticed that we are still going high here. So you have this retest. This is a continuation, and plus the news also will even count here. Let's go into 15-minute time frame. I guess this maybe wasn't it a CPI for the price to do this. Maybe around that scope. Okay. As you can see, for 15 minutes, we have this coming out. This one for your liquidity, yes, it went, but we're not focusing on that. The game has changed now. It's an inversion fair value gap, just like a turtle soup as we enter. When we get the test, we look at the order block, the body of an order block, plus this fair value gap being respected, as you can see the close right here. So let's go and see the beta entries around this area on 5-minute time frame. Forgive me, guys, if I'm too fast. I'm trying to beat time plus this flu. Okay, we have the high, low, high, low. What model are we going to use here? Taking it from this low to this being the highest high before with the entry. Let's change this into OTE. As you can see right here, we have 70.5% right there as a test for the market to even go higher. So that would be an OTE model. Not everyday trading. Not day trading is everyday trading, guys. Please. Day trading is not everyday trading. Then you could have had your entry right there, just with your fair value gap. And you could have had your entry low, lower low, your breaker, or everything there is being given to you there. Below 30 pips, even here. Utilizing the lunch hour time. Even this time it was forgiving. As you can see, your lunch is there. Price was forgiving with 1:7, around 180 pips right there. Only when you do more research, guys, and when you do more practice, this ones, then you will know that you have graduated if you start to notice this type of trades. But you don't become obsessed. Whatever the system that you have, that is the system, that's what you use. Let's go to the next day, of which will be Thursday. This was going to be your clean day. Maybe you had that 2 days not trading, or that 2 days as your loss. But remember what you are doing. You are just covering 1 plus this 2. You have a fair value gap, the cleanest one, the closest one right here. This was your cleanest day. 5 a.m. close, obviously closest hanging fruit. This is your clean day. Let's go to 15-minute time frame and see what we like to see, if it's there. Of course, you have liquidity being taken out as a support right here. You can see price being supported, taken out up to this level. And then after this close right here, you would see that this was the order block that we were coming after. And then we have this fair value gap. This is interesting, guys. Let me just do this. Let me delete this one. Let me just do this. Look at this fair value, this order block being respected. Let me change the color to some visible color right there. Okay, you can see this order block right here. Look at the close. This is being respected, guys. So what else do we have on a 15-minute? We like to see the wicks and the fair value gaps as well. We have a fair value gap during that time. That is most important, guys. During that time, it's been respected. That fair value gap has been respected. And then we will wait for NYSE. NYSE. Then after, let's go to our entry time frame. Getting into our entry time frame. Let's see our entry model. We have everything that we ticked. Entry model. What kind of a model is this? Low. We have a high here. Treat it as a mitigation, whatever it is that you want to call it. But I will call this one a title soup. You can utilize this fair value gap right here as a mitigation. I like to utilize this inversion fair value gap. It's it's like one of the strong convictions that I want to see. So let's go long. If you went long here, remember less than 40 pips. Below this one, or you can put it just right below this candle right here. But you know the TP, 1, 2, 3 candle, this candle, or this below this candle. Your closest hanging fruit supposed to be this high right here. This one got even past the lunch. Let me see. This was lunch. I was involved in this trade, and I think I have the record of this trade where I was trading this one live. I have recorded this trade where I went out somewhere around here. At first it came back, then around there again, and using the trading view paper trade, I let it run into this TP. Yeah, I have this. I remember this one. So as you can see, 138 pips, less than 30 pips, 1:4. It even covered those two losses that you had. Let's go to the next day, of which will be Monday. Let's go to the next day, which is Monday. Yes. I don't know whether it's this one or the one that I mentioned. Yes, is this also this one? This smaller fair value gap right here. So if you can look at here, we have a smaller fair value gap right here. Otherwise, we have this fair value gap then. Otherwise, we have this fair value gap that we are dealing with. So this fair value gap, 5 a.m. candle, then the 9 a.m. We have our fair value gap. Besides this one, we have nothing, guys. And then you have this considered as a clean trade. Then you have a closest hanging fruit right there. Let's go to our 15-minute time frame. I'm just trying to beat time, guys. You just have to watch this time and again until it knocks sense to you. Okay. And by now you should have noticed something, of which I will mention right now. You have this, what they call a breaker candle. I call it an order block. You can see even the respect here. You only have to see this. You do not utilize it to trade. You only have to see it then as your confirmations. And then you ask yourself, why did it go down? You would want to see a fair value gap that was mitigated here. Do you have one? Yes, you have one right here as an inversion fair value gap. Remember, during this time, this has already happened. Inversion fair value gap, I guess this maybe is NYSE, after NYSE. This is NYSE, after NYSE. Again, this is the closest hanging fruit, but look at the price right here. Look at what you have right here. Plus, this was mitigated as well. You have this, plus you are going to utilize the lunch time as well. So this was going to be your closest hanging fruit. Okay, let's move this one right here. I said you are going to remember the rules. You are going to use price, but preferably you will use what? The previous 4-hour candle. This is the reason why you got this 10 after this liquidity has been taken out. So with this, let's go into our entry time frame. Oh, before that, let us check what is happening. We got carried away. We took out the liquidity here. We took out the liquidity here. Plus this invasion fair value gap. We took out the closest liquidity that is around it. That is important. Then did we have an order block? We utilized this one. Hence, this right here. If you can look at this right here. This right here, if you can go maybe to 30 minutes or an hour, it's just one order block, but I cannot use these candles as an order block because look at this candle closed below. You see? Plus, I'm not using this, guys. I am not using this to enter. I want to see. This is my confirmations. I cannot emphasize that one further. Then let's see why we had to how we could have entered that one. This is amazing. This is really, really amazing. Wow. This is a clean title soup, guys. This is the cleanest title soup that you can ever have. Invading this fair value gap because you know that the market is going to move up. Then below your fair value gap should be your stop loss. Remember, less than 40 pips. Around 80 pips. That should be your TP. This is the reason why you have it like this. So rules, guys. Let's go to the next day, of which will be what? Wednesday already. The 12th. Wednesday. Okay. Little bit advanced. Wow. Wednesday the 12th. You remember the one that I talked about saying it was the OTE and then as the market was moving even high. Look at here. We have this 5 a.m. candle moving far away from the fair value gap that we have. We have this fair value gap right here. On this one, you stay away or you consult other things that you have. But if you can look at my market maker model video, whatever that is happening here, I have this as a TP of which I've outlined it during December, saying that we're coming here. So those are the nitty-gritty things that you're going to also need. And then this comes with experience. The more you do it, the more you gain more experience into price. So this one right here, this is 5 a.m. candle. We had that fair value gap right there. So you're not going to look at the that fair value gap. Instead, after it has closed right there, the question is that you want to know whether you are going back or you are going up. So you will have this as a draw on liquidity coming into this fair value gap, and you will have this as a closest liquidity to take out. Which one would you go for? Obviously, this would be the closest one, unless if market tells you otherwise, because we are using time now. Let's go to 15 minutes. Have more investigation in what we are doing. And it was this not an it was CPI. Yes, I remember. This was CPI, I think, somewhere around. Yes, this was CPI on the 12th June. Let's check. This is the reason why you will have certain things. The 12th June. There was an event. This was the reason why this had to happen like this. As you can see, this was CPI news. This is the reason why we had to have that. So, moved away, but the market, the price, the market was forgiving. I guess it was, where was it? Okay, 930, somewhere around here. It had to come for this fair value gap right here. It had to come for this fair value gap after the close. It had to come for this fair value gap in order to go for this high right there. Then it went for the high, looking into lunchtime somewhere around here. You can see lunchtime somewhere around here. But I wouldn't advise anyone to trade during this high impacting news unless if you know what you are doing. Because you would even want to wait for 50% at least to mitigate. Because look at your stop loss. Where are you going to put your stop loss? This is no man's land. But let's go to entry time frame. We have that fair value gap on 15 minutes time frame. Let's go check if ever we had even something more to enter using 5-minute time frame. Guys, if you do not practice these things most likely every single day, this will frustrate you. You will even quit this and thinking that this is not even working for you. So you could have had this one NYSE right here to spool up. So this one is just a loss trade. Just have to watch the market. Everyday day trading is not everyday trading. To avoid such things. Okay, let's go for after CPI. When was this day? The 12th June. Let's see the day after. The day after the 12th June. Okay, this is interesting. Remember, what are the rules saying? This is interesting, guys. I wish yes, this is interesting. This is very interesting. Remember, we said if this for our fair value gap, the price will draw into it or will expand from it. So let's look at this. Look at the low there, 564.3. Look at the low there, 564.8. So it didn't mitigate this one. So it means that the next candle has to do what? The next candle has to come in. You can utilize this as a buy and as well as a sell. Let's go to 15 minutes. This should be just right closer here. This shouldn't be far. $15. This was the Thursday. Like I mentioned, as you can see, this didn't mitigate this fair value gap right here. So we expect this fair value gap to be mitigated. So what do we do? And I'm glad as we approach the end of this, we are start to seeing other things that we mentioned on the rules there. What do you have? Liquidity was taken, even this one, even the highest form of liquidity. We have a draw on liquidity as a fair value gap right here. What was this? There was a news before that performed. NYSE, this is what I'm interested in. If you may ask me why, looking at this week, remember I mentioned the weeks. We look at this week and we want the consequent encouragement of this week. We treat weeks as fair value gap, guys, as fair value gaps as well. These are an imbalances. You can see there is no story with that can even classify this better. You can see right here, As you can see, the 50% consequent encouragement, this was the reason for the fall right here. So if you have this one, you would have this. Let's delete. You'd have this as your fair value gap, 15-minute time frame. Then you go to your entry time frame. Remember, this is a drawn liquidity. This is your TP, where you're supposed to get your TP. It's in reverse, and I'm glad we had to even engage with this one right here. So from 5-minute time frame, let's see what we could have done even better. Wow, this is more trickier than I thought. We have this. This is more trickier than I thought. Okay. This could have been just an impulse entry right here, but it's more trickier than I thought it would be. Utilizing this fair value gap again, reusing this fair value gap. But guys, I wouldn't say what is this, because this is outside the models that I've established for you. But I liked the part that we had the consequent encouragement here, and then you could have get your entry. But how? I would have went impulsively here due to mean threshold, due to the mean threshold of this order block right here. But I'm not saying that everyone could have caught this one, or maybe I might have missed it as well. But with these convictions and experience, this was a nice trade. But let's just let it go for that matter, and go to another day, of which will be, not to bring confusion, which will be Friday the 14th. This video has been long, and once I start to bring even other things here, you'll even be more confused. Not interested. Okay, Friday 5 a.m. we reused the very same fair value gap that we have right here. As you can see, 5 a.m. candle closed, then our entry candle. Let's go to 15-minute time frame. One last more week left, guys. One last more 5 days left. This is the Friday. Okay, internal liquidity, everything else, plus this one as we close inside. So, looking at the time, you want to wait for 9:30. Looking at the price, let's go to H4. Oh, or before that, we can even identify this one right here. It's 5 a.m. candle. This will be your closest hanging fruit right here. So looking at the price, where it started, this was the high of the candle. This could have been your closest hanging fruit. We have lows taken out, even this one. Now let's see how we could have entered this. We go to 5 minute. Let's see what we have. During the time of our entry, remember you need to wait for NYSE first. As we dropped here, this low, this as well was a little bit more trickier, because it was easier to come in before time using the 7 a.m. silver bullet right here, because you could have got market structure shift, the close right here, coming with this fair value gap, but you were late and you know that your TP is here, and before you come into your time, okay, it's right here. Okay, just right here, because that was the closest hanging fruit there. How you could have entered this market, utilizing this mitigation. This mitigation, you have this fair value gap right here. Focusing on time, guys. You have it right there. And then looking at the time, right after NYSE, you got the second, you got re-entry during NYSE, not after NYSE. You got re-entry of that. It went high, then you got re-entry of that before it even went higher. It gave you a re-entry right here. I don't know whether going to be scared of it or not, but it gave you re-entry there. Utilizing that fair value gap. Remember that 30 pips being your highest point, and then using price, maybe mean threshold of that, 80 pips being the minimum. You could have pushed maybe to that high. The minimum target, that was 2 point something. That was crazy. Day trading is not everyday trading, guys. If this is not clear for you, you just move away. It is nice to look at it, and then don't worry, we'll catch it another day. Capital preservation is key right here. Then what was this day? Friday. Then we're going to look at Monday. I hope it's this one. Yes, this is Monday. You have a fair value gap right here. This fair value gap being the draw on liquidity. Here you can sell at the same time buy. But waiting for NYSE, let's go to 15 minutes. Keep on deleting this because this is too late. Delete this one as well. We're done with it. On that fair value gap, 15 minutes, what is it that we like to see? We like to see order block and that fair value gap liquidity being taken out. Can you spot that now? Okay, I can spot liquidity, internal range liquidity being taken, internal liquidity being taken out up to this level. What did we respect, or what did we go for? Just right after order block, that smaller disrespect of an order block, we like to have a fair value gap right there. We do have a fair value gap plus order block. This is that kind of a miss. Just a small miss. If you can look at this, you have just a small miss, few pip miss, but this one respected what? This respected this order block right here, if you can see, looking at the close. So we want to see this happening, then we move to our entry time frame and see how we could have entered this trade. Okay. $10.25. You have your low, lower, low market structure shift, price coming back into that fair value gap plus that order block. That could have been your entry. Utilizing that fair value gap. Remembering where your stop should be, you can even utilize this low, the low of this candle, even below the consequent encouragement, because the price could come for this consequent encouragement. As long as you are below your threshold of stop loss. Following the lunchtime maybe, plus this high. Seems like I was also involved in this trade, but I went out here. This being the highest point, 2.5, 67 pips to 70 pips. So let's go to another day, Tuesday. Guys, I hope this, as we move, it makes sense a little bit. Please highlight the trades that you think are most easier for you. Then you are only going to look at that kind of scenarios, because this plays out almost every day. Look for the trades that you see that these ones you can handle. Then just go for them. As you can see, we are near the end. Tuesday, that was Monday. Let's look at the Tuesday. Looking at Tuesday, the following Tuesday, 9 a.m. Same approach. Tuesday, we had the same approach. Remember, Monday failed to come. Tuesday came in. Let's remove this one. Same approach on Tuesday. 5 a.m. candle. The only fair value gap that we have is this one right here. Then this will be what? This will be draw on liquidity. So it means the next candle will come into this one. Let's see how it's done. Let's go to 15 minutes. You can also buy after tapping into that. If you still have time, but here the sell was your way of coming in. So 15 minutes, we can see taking out the liquidity right here. Then the time of entry right after, during NYSE, not even after, during NYSE right here. As you can see, you have your high, your higher high. You can argue and say it's a mitigation looking at the close, but doesn't matter. With your fair value gap right here. And this is 15 minutes. Remember, we said we were looking at the... If you are using 15 minutes, you can also look for a price action. So if this 15 minutes give you this, that means we might even have a better entry when it comes to our lower time frame. Let's go to 5 minutes. Let's go to 5 minutes and see how we could have attacked this. What is this? 8:18, 9:10, 9:30. Okay, we didn't come for this one. This was a little bit trickier than I thought. Market structure shift. Oh, here's the hidden entry with this 15 minutes fair value gap. Remember, we are using the wicks. This was a hidden entry, guys. Consequent encouragement as well. As you can see, this 50%, that's why the market had to drop like that. This was a hidden entry. When I say consequent encouragement, I mean this week right here. So above the week, right here above the week, or you can just accommodate certain things. And then where's your TP? Your TP would be this fair value gap right here, because you are going towards this fair value gap. You can also target that 80 pips, remember. But that won't be always the case. without wasting any time, guys. You serve the trade. You see the ones that you can see more, and you keep on watching this. After seeing the first one, focus on those ones, then keep on watching, see the other pattern of trades, and then maybe as you grow, you will understand maybe 3 different types of your trades here, and then you can maximize your days of entries. And this works only on your Nasdaq, please, not anything else. Let's go to the next day. When was this day? Was Tuesday. Let's go to your next day. Tuesday, Wednesday. Okay, we'll leave this one because we don't have a, but I have explained it as well, because we don't have a fair value gap right here. Or is this a fair value gap? Let's see the time, but it's not a fair value gap. For that, we don't have a fair value gap right here, so would want to go for the highs. So let's leave this one. Let's go to another day, of which is Thursday. We also don't have a fair value gap right here. Let's go to another one, of which is Friday. Friday was very interesting because this took me out, but it was due to everything else was okay. Let me just analyze this one. It's just that I just had to wait. Let's go to Friday then, which is the last one. Looking at Friday. No, Friday, not Thursday. Friday, this was the candle. Friday, I was here. Closest fair value gap that we have. As you can see, this took the high and the low. I was considering this. This what happened. Let's go to 15 minutes. Plus, I was occupied. It is very important when you want to trade to have your focus intact. So this is what happened. So I waited for for this, and I guess I had this. What did I have here? This 15 minute has occurred. Okay, it took the liquidity right here. Sorry to take time, guys, because I'm trying to refer to also my emotional my emotions where I was. Yes, I saw this. I also saw this fair value gap right here. Then this was Thursday. This was Friday. Yes. When was that Friday? Come on, guys. Yes, this was that Friday. This liquidity was taken out, right? And here I blame a little bit of a bonus that I got with XM, because I was expecting that the margin was going to, I was going to be under that free margin. I was going to still be on a trade because I only deposit the amount that I'm willing to risk. Then I don't put a stop loss. Then I have to filter that on my lot size. I have to filter how much it will this cost. Then I have to put that lot size. Then I leave the bonus to be part of that margin as before margin call. So this on 15 minutes, this has occurred. It's better even on the 5-minute time frame there, because it explains even way better. As you can see, this is what happened, guys. After this has been taken out, wait for this. What kind of a trade will this be? this will be my title soup. This will be my title soup. The deposit was 200 rand. And then they gave me 100%. So it means on the equity I had 400 rand. And this was going to, for me, this was supposed to hold me not to go out, because as you can see, the TP was smashed as intended. What was happening here? You can see here 40 pips, you see, but I'm not going to put a stop loss since I said I didn't have a stop loss, but anticipating that my stop loss around less than 40 pips, my stop loss would be here, but it was going to be accommodated by the what? Was going to be accommodated also by the bonus. So I think since it was supposed to be somewhere maybe around here or around here, if I had a stop loss, of course the stop loss was going to be hit, or the order block below main threshold of an order block, of which this is also a safest way to put your stop loss. And then my TP 80 pips or more as established. I had that one, but the entry that I entered when the market, let's explain that just for a minute. I entered when the market came, utilizing this candle as this candle dropped somewhere around here, and utilizing this. So I entered around this area right here. So if market dropped, that on filtering this, accommodating also the spread as well. The spread will want me to enter here, of course. So looking at this as a, let's just call it 40 pips. This 40 pips with 0.1, I used 0.5. With 0.1 is 80 rand. So I have 4 80 rands here. I mean like 5 80 rands here, of which is going to be 5, it was going to be that 400. So this took me out even with that, okay? It took me out even with that. Then also, and it took me out just right here. I don't know, maybe I will edit and post that screenshot there, because I do have a screenshot for that. It took me out just right there. After taking me out, then it even went further. So what is the lesson from that? Could have even reduced the lot size, because I was going also to be inside that trade. If I used 0.4, then I was going to smash the TP as the TP went in. Guys, thank you for watching this video. I know it took long, and I know this is unscripted video. So what you have to do, you just have to watch this again and again, and with the notes, and you have to go back to your charts and try to do what I did. Try to see how I saw the trades, and try to follow those rules. Use the 4 hour, 15 minute and the 5 minute time frame to see the entries, then until it makes sense to you. And please do this thing with a demo so that you can get used to the live market as it performs, because it is not going to be the same as it was interpreted here. The live market is different because you have to wait a little bit longer than this for the price to perform, but it is a nice experience, as you can see. See you on the next video, guys.